Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on trading with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. So without further ado, let's jump straight onto the chart. In this video, I will be speaking about EURUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, so hedge funds, and how they're moving their positioning. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. Now, starting from the monthly time frame, what we can see is that we have a market which at the moment is testing a quite strong monthly demand and support area. In fact, from here, all this previous move to the upside was created. Again, here, the market tested its zone and rejected it to the upside. And we can see how multiple times the market tested this zone and rejected it to the upside. And at the moment, just last month, we had another test of this zone. The market started rejecting it to the upside. And from such level, we could expect more potential bullish continuation. So from a monthly standpoint, everything seems extremely bullish. Dropping down on the weekly time frame, what do we see? Well, from a weekly standpoint, the situation is quite clear as well. The price action is what you would usually expect. In fact, what we can notice is that we just went from having a bearish market to now having a bullish market. The market clearly here was creating lower lows and lower highs. Then we had this horizontal accumulation and the market shifted to creating higher highs and higher lows. We had the first higher high here, so higher than the previous high. Then we had the higher low here and another higher high here. Now, what we can see here is that we had the previous high, higher high, higher high. Here we had the previous low, higher low, and here we could expect another higher low, and then the creation of yet another higher high. So from a weekly perspective, everything seems quite bullish as well. We can also notice that from a pattern standpoint, we now have an impulse and a correction. And in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 50% and a 0.618 Fibonacci retracements, which at the moment are lining up exactly at this area, which if we extend to the left, this exact same area, we can also see how it was the previous level of support here from which all this previous move to the upside was created. What this actually means is that we have confluence of support inside of this area, inside of which we could see more institutional longing, which at that point would further increase the probabilities of a potential continuation higher away from this zone. And we will be speaking about institutional longing later on into this analysis. Dropping down on the daily time frame, what do we see? Now here on the daily time frame, this is where things get very interesting because what we can notice is that in creating this move to the downside, the market is also creating this M pattern. And in general, after the creation of an M pattern, as I explained many times, we could expect a rejection higher for the completion of the pattern at the neckline. So the previous support turned resistance here from a daily standpoint. This means that if the market from here will create a bit more bearish continuation, that would be perfect because at that point we could expect a rejection higher for the completion of the pattern at the neckline, which is essentially this level right here. Now, if we go and see what we have when it comes to the commitment of traders, so what institutions are doing, and we check the data for the euro, the first thing that we have to keep in mind is that by checking the data on the euro, we are actually already checking euro USD because all currencies on the spot are traded against the USD. And what we can see here is that with the last reports, net positions have been increasing. We went from having 75.5k net positions all the way up to having 143.1k net positions. Now, this is a huge increase of the net positions, showing how institutions are moving to the bullish side for the euro, meaning to the bullish side for euro USD. What we can also notice is that with the last reports, we can see massive amount of shorts getting closed and at the same time longs getting added. We see in fact here 2,000 shorts closed, 1,600 longs getting opened here, 11,000 shorts closed, 8,700 longs getting opened, another 10,800 shorts closed, and 9,900 longs opened. And with the very last report, we can see here 11,100 shorts closed and 2,300 longs added. So there is no doubt that we're seeing a huge amount of institutional longing on the euro. Institutions are moving back to the bullish side of the euro, meaning to the bullish side of euro USD, because as I just said, all currencies on the spot are already traded against the USD. Now, this increases the probabilities that since from a technical perspective, we have already noticed that everything is quite bullish, we could expect more bullish continuation away from this level. So how I could be approaching this potential move higher? Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what I could be doing potentially is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to me one of my valid entries, at that point we could be looking for a potential move higher for the completion of this M pattern at the neckline. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which is linked both in description and in my bio. Here, you have the possibility to get access to my entire courses with all the rules of the strategies. You also have the possibility to get access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll lower past the testimonials, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the sign up process. So I really suggest to go and check it out as soon as possible. The link is both in description and in my bio, and I will see you in it. If you enjoyed the video, make sure to drop a like. Also, if you have any suggestions on any topics or pairs that you would like me to cover in the next videos, make sure to drop them in the comments below, and I will see you in my next video.